Hey, welcome back to Father and Son Investing. Continue our discussion on corporate bonds. We're going to talk about the disadvantages of corporate bonds. These are buying individual bonds, not necessarily bond ETFs. This list is going to be more extensive than the advantages list that I gave in the video preceding this. So without further ado, let's get into this list of disadvantages of corporate bonds. Many of these will be similar to disadvantages for US Treasuries. The first one that we'll talk about is interest rate risk. If you're not familiar with the way bond prices move, as interest rates go up, bond prices go down, and vice versa. So the risk here is that you buy a bond that's yielding 3% and suddenly the prevailing interest rate goes up to 4%. Your bond becomes worth less money because the price will go down. So you face some interest rate risk with bonds. The second risk that we'll discuss is credit risk. This has to do with the credit worthiness of the company that you're loaning your money to. That is essentially what you're doing with a bond. You're loaning your money to a company. In return, they're going to make interest payments or coupon payments to you and return your principal when the bond matures. That's what it's supposed to be. But there is a credit risk here, particularly if you are dealing with junk bonds. Now, depending on the type of corporate bond you have purchased, you face an increased credit risk. This is quickly going over the three standard rating systems for bonds in the United States. We have Moody's, Standard & Poor's, and Fitch. Standard & Poor's and Fitch are quite easy to remember. Anything less than BBB minus is considered higher credit risk. The lower you go here, the lower you get towards junk bond and the chance that your principal will not be repaid, in which case you should expect a much higher interest rate. Another risk here for bonds and really any type of investment has to do with inflation risk, and that is the risk that your return on your investment might not keep pace with inflation. The next disadvantage has to do with reinvestment risk. Particularly if you are in a short-term bond, you may have a 2 or 3 year bond that's paying you 5 or 6%, but then when that bond matures and you want to try to reinvest, interest rates may be 2 or 3%, and you just won't be able to find the same kind of yield that you were getting on your current bond. Another disadvantage when it comes to corporate bonds can be liquidity risk. You know, US Treasuries are quite liquid, but you may have a particular type of corporate bond that might not have as liquid a market. And so trying to be able to sell that bond, should you need the money, might be a little more difficult when you are in corporate bonds versus US Treasuries. You will find that many corporate bonds will be callable bonds, meaning that the company has the right to call that bond or pay that principal back to you early. If interest rates were to go down, they would be interested in calling that bond so that they can pay you off and refinance at a lower rate. If you are buying international corporate bonds, you're going to face potentially some currency risk as well. Depending on how the currencies between the two countries differ, you may or may not lose money. Now, here is an important one to remember for corporate bonds, and that has to do with the economic state of the company. There may be factors which creep up during the life of your bond that significantly affect the company's ability to make money and therefore to make their coupon payments. Consider an insurance company which may be facing massive losses after multiple hurricanes. You can see that that may put significant financial stress on an insurance company and potentially make it hard for them to make their coupon payments in a timely fashion. Now let's talk about tax treatment of corporate bonds. Corporate bonds are taxed just like any other income. There is no tax advantage to holding a corporate bond. The one way that you could protect your earnings from a corporate bond would be to hold them in a non-taxable account. Let's talk about another disadvantage for corporate bonds, and that is that they will have a ceiling. What am I talking about? Well, because corporate bonds pay back at par value, there will be a ceiling or a limit really to how much your bond may appreciate in value. The chance of it going to 150% more than what you paid for it really is quite slim versus stocks, which easily can go way higher than that. Lastly, corporate bonds can be very sensitive to movements in the US Treasury market. Despite the fact that a company may be doing fantastically, the price of its bonds may go down if the yield on US Treasuries goes up. Corporate bonds will have a spread between what the prevailing rate is for a US Treasury and what the yield will be on a corporate bond of similar maturity, as it should be, because you're taking on a little bit extra risk if you're buying a corporate bond versus a US Treasury. When we're talking about that spread, this graph here from the Financial Times gives you an idea of how this spread between corporate bond yields and US Treasury yields has looked since 2005. Imagine having a corporate bond back here around 2009 when you're getting an extra 6% over a US Treasury. However, if we go out to 2024, you'll see that that spread has come down significantly. In fact, it's the lowest it's been since March of 2005. And you may have seen this article in Barron's talking about folks considering moving their cash to corporate bonds and why you should think twice about it. And the juxt of this article has to do again with those U.S. corporate spreads versus U.S. Treasuries. So I've listed here a number of disadvantages of corporate bonds for you. I don't think that these disadvantages should necessarily sway you from purchasing unless something in here is critically important to you and you're just not willing to accept that risk. Overall, if you are in investment grade corporate bonds, I think these risks are significantly mitigated. The next video that I do will be the advantages of purchasing corporate bond ETFs versus an individual corporate bond. We'll follow that with disadvantages of purchasing corporate bond ETFs. And then the next video after that in this series, I'm going to show you how to go about purchasing either a corporate bond or a corporate bond ETF. So until next time, enjoy your investing.